I think today's event in itself probably will not play a big role. I think the biggest risk out of Washington is basically trade escalation and potential for tariff implementation. We've seen some already. We need to see what happens as far as 2019 goes. Fundamentals have been exceptionally strong. When you look at equities, you've seen an extremely healthy buyback trade, also that continues to support the market along with valuations that are by no means stretched. So we think you have a good backdrop. We just basically need to see what happens with tariffs because those are a risk to 2019 numbers.
The market was already going to be down today as a result of these reports that China canceled the meeting over trade. So we took that leg lower, as I said, on the Rosenstein headlines. But it's been remarkable, though, that the market hasn't really cared much about trade either for more than a few hours or a day.
I mean, when you look at earnings so far have not really been. There hasn't been any material impact in terms of bottom line prints and earnings. So far, companies are starting to talk more and more about risk around tariffs. But like again, no impact on earnings thus far. I think that's a risk that we're basically paying close attention to for 2019, and that's why I think you're seeing a market that's been fairly resilient so far.
But you're not working into your models trying to factor in what happens in the midterms. We're only 6 weeks out.
It's very hard. I mean, look, there is phase 1 has been implemented on tariffs. Part of phase 2 has been implemented. There's discussion about phase 3. Clearly, phase 3 goes through. Numbers for 2019 we think will come down at least by $5 in terms of forward EPS, if possibly up to 10. But again, it's very hard to distinguish between what's reality and what's basically noise.
Yeah. Well, we're going to get the midterm elections. That's not noise. I mean, it's the reality of what's going to happen. The outcome is far unknown at this point, Lindsay. So how do you factor it all in?
Yeah, it's definitely hard to factor in. Usually you see volatility increase significantly in the third quarter going into midterm elections, usually up 34%. We haven't seen that this year. Looking at a lot of the different polls that are out there, it seems like the Democrats are going to take over the House, which would just result in more gridlock within Congress, which doesn't bode well for growth and the market going forward.
I don't know what could be negative about gridlock in the White House or in Washington. What could they do? We've got the tax plan there, right?
Yeah.
We've got the economy that's going, on all cylinders. So why would gridlock be negative?
You know what? I misstated. I don't mean that it will be negative. What I really mean is that you're not going to see any growth policies really be pushed through. There's just going to be infighting. Not a lot is going to get done. And you're right. The market usually typically does well when there is a gridlock in the market. I just don't expect increased amounts of stimulus coming.
I mean, there is the saying, gridlock is good, right?
Yeah.
Right. And I think that the way that Congress is positioned now and the way that it's anticipated the election will come out, which is the House with the Democrats and the Senate with the Republicans, that could change. But even if that happens, we've got the growth policies in effect. We've got regulations that have been cut back. We've got tax plan going forward. So I don't see what the issue is with that. I think gridlock would be fine. In terms of what happens with Rosenstein going forward, I don't really see the issues there either. To me, maybe this is the smoking gun that allows Trump to go after Jeff Sessions and say, he worked for you. You should have known this. You should have kept him in check. Even then, though, I think it's a momentary sell in the market, but the market keeps going. I'm with you. I'm more concerned about inflation. We're seeing used car prices move up. While oil's not part of the core, still, the impact of higher energy prices feeds into everything, the feedstock. So that's my biggest concern.